introduce yourself.
Good morning. This is Matt Brady with Atilano. We're on our way to the Skyline Home Loan Sales Rally up in Burbank, California. And as we were sitting in traffic here in Orange County, we thought we would share with you the steps to purchasing a home. We work for one of the best lenders in the country, and we're talking about some of the things our buyers have been experiencing. And so we thought we would have a little conversation.
Good morning, Facebook.
There's Eric driving the car.
That's right. So while I keep my eyes on the road here, I think it's important that everybody learn the very first step in buying a home. You've heard me say it before. You want to get pre-approved or pre-qualified, but pre-approvals are better. And to do that, you need to find your own loan officer and request a pre-approval. The industry is leaning more towards you, the consumer, making the better choices. So if you're watching this video this morning, you have already found two of the finest loan officers in San Diego County. You can tell that I know what I'm talking about because I'm wearing glasses now. And Matt's been in the industry for quite a while.
The key is find somebody that works for Skyline Home Loans in your area.
Yes.
And we can pretty much assure you that you're going to enjoy the experience.
So what do they do after a pre-approval, Matt?
So you get pre-approved, then you find a realtor if you don't have one. If you don't have one, ask your loan officer, because we know the talented and quality people in every area that we work in. Mm-hmm. So ask for a referral, absolutely. Then you go out and you find your dream house. You're going to make an offer, get an offer accepted. There's sort of an art to making an offer as well.
And so negotiating your price. Yeah.
So depending on what you're trying to accomplish, you might have us write you an approval letter that's good for exactly the offer that you're writing, so that you tell the people that you're qualified, but you don't want to have them counter back because you can afford $100,000 more. Or you might, if you're in a competitive situation, you might want to say, I'm writing an offer on a $600,000 house, but I'm qualified to buy an $800,000 house. That would give the seller some comfort that you're going to be one of the best qualified people they have. So it's up to your realtor, the strategy they use for that, but that's something you need to think about.
And getting pre-approved, let's not forget, it's not just the art of you being able to borrow any money. In fact, it's quite the opposite. It's allowing us to help you become comfortable with the monthly payment you want to make on your dream home. A lot of people think that because San Diego is considered a high demand place to live, that it is $1 million for every house. Couldn't be farther from the truth. 99.9% of my clients don't buy $1 million homes.
Yeah.
But they do live in a home that they absolutely love and they can afford. Rates are super low, so you might want to keep that in mind. The art of being pre-approved is to find a monthly payment that you're comfortable making, as well as enjoying the benefits of homeownership.
Oh my gosh, I just brought up like 15 things I want to talk about. It's going to be in our future videos that we do.
Yes.
Like putting down payment and deciding whether you're going to pay mortgage insurance or do lender paid mortgage insurance, so that you have a slightly higher interest rate but no MI.
Right.
So we'll get to that in the future. So you find your dream house, you make an offer, you get it accepted. They're going to ask you to put an earnest money check. You put down this deposit that's deposited into escrow. Escrow is in California anyway, that you, depending on what state you're in, you're either going to use a lawyer or an escrow company.
Right.
They act as a go-between between the lender and the buyer. We're not allowed to give you money directly. There's all sorts of fraud things that can happen there. So in California, we use an escrow company. You're going to have to do a title search to make sure that there's no liens on the property or clouds on title, as they say, that's going to prohibit you from actually owning that property free and clear for yourself.
They're like the referee in this transaction. Escrow is the neutral third party who's got both parties' best interests in mind, but they don't sell anything. They just make sure that they keep on record what the seller has told the buyer and what the buyer has agreed to or also told the seller, so that communication stays very firm with zero or to very little misinterpretation opportunity. But that's what escrow does. And you absolutely need escrow. Your escrow deposit, just to circle back to that real quick, is also going to be a negotiation tool from your realtor. A lot of times the listing side or the selling agent's going to want a certain percentage, 1 or 3%, right?
Yeah.
But in most cases, you can even do less than 1%. It just depends on the ability for the negotiation aspect of it, and if there's any additional compensating factors, and if you're getting a seller credit, gosh, I could go on and on.
Right. Well, and once again, if you're in a competitive situation, you might put a certain amount of money up front. You're going to put it down as down payment or your closing cost anyway. You can often step up the deposit during the process to make the seller feel more comfortable and give them reassurance that you're a serious buyer.
Now, after you've made that deposit, we have a few additional steps that are very important that everybody needs to know. First, the earnest money deposit needs to be made, I'd like to say within 72 hours of the offer being accepted, usually, right?
Yep.
2 or 3 days, really?
Yep, usually.
And then you're going to have an inspection, and you're going to have to pay for the appraisal. And these are fees that are going to be out of pocket. They're not rolled into the closing costs. They're not paid at closing. So you have to be well aware that they're going to be asked of you to be prepared to spend that up front. If you're buying a single family residence, that usually will come just under about $1,000 for the both of them.
When you mention inspections, so you're going to, depending on the type of loan you get, you might need a termite inspection if you get an FHA loan, for instance. So you're going to have an appraisal in all cases. You're going to have a home inspection because that protects you to find out anything that might not be visible to the eye. Right, foundation issues. Yeah. If you're buying a VA loan, if you're doing a VA loan, you should make sure that there is no chipping paint anywhere, including on the back fence, because depending on the year that was built, depending on the year that it was built, they could have lead in it, and that's an issue for the VA. So you need to make sure, even if it's having Eric here drive over and paint your back fence.
I have painted plenty of homes.
That's why I mentioned it. So that's something that people don't think about. You have to have smoke detectors and carbon monoxide detectors installed.
On the heater,
straps on the water heater, or you're going to have to pay for 2 inspections because they're going to have to go, well, it's called a 442, a little less expensive one, where they go back and verify that the work that needed to be done was done.
It's about $100.
So if you have the termite, you could, if you buy a manufactured home, you're going to probably be required to have what's called an engineering cert.
Yep.
Where they have to go out and certify that the foundation was done correctly. And I think that pretty much does it for the inspections.
Yeah, and they're pretty common. It's really common sense, because you want to make sure, like buying a car, all the wheels turn in the right direction and the engine runs, right? Well, housing has a lot of little variables involved in getting it done. Plumbing, electrical, foundational, painting, roofing, all that stuff. So get it looked at. Get a really good look at what the bones and the guts are in your home that you want to buy, because you can't judge any book by its cover or just the house by its front door.
There you go. Okay, so we're under a bridge, so the lighting's really bad.
Terrible.
I'm going to keep you aimed at Eric because you can't see me. So, okay, so you've done the inspections, everything's fine.
You've ordered appraisal.
You've provided all of the documents that we as a lender have required from you, which are extensive, because we put people through what I call an intense fiscal frisking to get a loan done these days. So you have we're going to collect tax returns, bank statements, proof of your income, your assets, the whole deal. So during this process, you're going to receive initially a loan estimate from us to meet the new TRID requirements. So we're going to send you out something that pretty accurately describes what your actual costs are going to be. They seldom vary from what we tell you up front, unless something changes as far as the loan itself.
But we can't stress enough that it is very difficult to provide an estimate of closing costs prior to learning which escrow company is actually going to handle our transaction.
Right.
because escrow companies, no two are alike. They're not completely, substantially different in a lot of cases. Very few of them are, depending on the property and the type of the transaction you're getting. But it's not just a regular fee, right? It's not like, you know, one regular coffee at Starbucks is the same regular coffee at Starbucks at every single Starbucks. Those fees for every purchase transaction vary per escrow office and the agreement on the contract.
Are you saying that a regular cup of coffee at Starbucks isn't the same at every Starbucks?
I am saying they're all the same.
Oh, okay.
What I'm saying is no two purchase transactions and fees are alike.
Okay. So you've made the offer, your offer accepted, we've gone through the escrow process, we've opened escrow, we're getting your loan documents sent over. Now you're going to have to go sign your documents with a notary at the escrow company.
Yep.
Or sometimes they send you a mobile notary to come sign at your business or your home. But you're going to get a full set of documents, including a title and a deed to your new home. And these are the most important documents that you keep after the transaction, because whether it's refinancing or anything that could come up as far as the cloud on title or somebody else that has a claim to your home, you need to keep those documents in a very safe place. You either print them out and put them in a safe deposit box, save them on a stick drive or something, but it's something that we experience as we spend many years helping the same clients. We have encountered people that have not saved these things, and having to get copies of them from either the escrow company, the county, or the previous bank is a lot more work than it is to just keep them.
Right.
So make sure you keep your note, make sure you keep your deed.
Yes, those are very, very good topics. So I think we covered a lot of the most valuable steps in buying a home right away.
Yep.
And the first step is getting pre-approved. So I'd like to introduce myself again, Eric Atilano. Share this video with anybody you know that doesn't know me yet. And Matt Brady, who's also one of my mentors and stronger coaches in the office. He's been doing this for quite a while. Yeah. And your local Skyline sales office in general.
If you're buying a home in San Diego County, especially if you're buying new construction, give me a call. I've closed about 3,400 deals in San Diego for builders. They all know me, and we'd be thrilled to help you and your family.
And if you need a golf coach or you have a partner who could use some coaching in golf.
I'm an above average golfer.
That's not a lie. Really, you could look him up. He's all over YouTube. So do yourselves a favor and at least get started learning on what you can accomplish. Here's the other thing. Let's say you get a pre-approval now, but you're probably not ready to buy for about 8 months. Guess what? That's okay. You need to find out what's on your credit report. You need to find out if there's could be any changes to help improve your opportunity to buy. Yeah. Don't wait till you have 6 weeks to find a home.
Right.
Because what if your corrections on anything or your improvements on any of your profile take longer than 6 months?
Right.
People always say, hey, Eric, you know what? I really want to buy, but man, I'm not in a rush. I couldn't think of a better time to qualify.
That's right.
When you're not in a rush, because who likes to be in a time crunch to accomplish a million things?
You know, it's an excellent point that he makes, that because we deal with this when we're doing new construction all the time, because people reserve a house that's not going to be done for 6 or 8 months. We have time to work on it.
Yeah.
And if you're thinking about buying resale, you should do the same thing. As soon as you know you're interested in buying, you need to get in touch with somebody. Let us pre-qualify you. Let us help you get to the most attractive position you can be in to make an offer to buy a house. So,
I've got an example I want to share with everybody right now, and then we'll kind of just get closer to wrapping this up. I had a young family approach me. They were interested in buying, but they didn't think that they could qualify for anything. And in fact, they weren't even ambitious to buy until 10 months down the road when the lease was up on their rental. I had convinced them to go ahead and give it a try so that we could see exactly what their buying power could be, because they didn't even know that either. As we learned more about them, they had old medical bills that they had no idea were still on their credit report. They had items on there that weren't even theirs. And if I would have taken their application to buy something in a smaller time frame, they wouldn't have been approved for the home that they ended up buying. In fact, we ended up cleaning up the credit report, with little to no real additional fees at all to do. And they got a higher credit score when they were ready to buy. They were pre-approved for a higher purchase value, and they got a house bigger than they thought they could get. And to this day, they're making the lowest monthly payments they can make on the house of their dreams, and they're so happy they started at least 10 months in advance. The most common buying mentality right now is when they get interested, they actually don't buy anything till another 12 months. But usually, they get their credit run probably 60 to 90 days before the 12 months is even up. I suggest you do it sooner.
You know what? It's so funny. I just had a client who came to me and said, look, I know I can't buy right now, but was actually a realtor. But my wife and I want to buy in a year. And I want to get pre-qualified. I know my wife and I have some credit challenges. So we pulled his credit, we got him pre-qualified. I told him I could do a loan for him. And literally 2 weeks later, he came to me and said, hey, found a house. So
I've had those too.
It funded yesterday. So you may not think that you're ready to buy for a year, but we may have a better solution for you.
That's right. So get on the phone, give us a call, share this with everybody. Hi, Mina. You rock, Mina. Oh, by the way, quick shout out. Go to the Wonderland, get anything you want there. Everything is amazing. The drinks are great. Also go to the PB in downtown. Resident Brewing is on tap now. It's great.
But you should have little NASCAR patches for people that you're advertising.
I should have a photo of Mina right on my chest right now.
Okay.
I love her. All her places are great.
Okay, we're gonna sign off now because the sun's coming in, and I've got to hold my hand up to keep the glare away. This is Matt Brady and Eric Atilano with Skyline Home Loans. You guys make it a great day.
Have a good day.